I'm Jim Czek. You're watching Kelowna Now. I'm here with Jerry Redman, and we're here with the RE/MAX report on the Central Okanagan real estate market.
Well, Jim, I think today we'll talk a little bit more about the Bank of Canada and what's the forecast looks like for interest rates as we move into the remaining of 2024 and into 2025 this week.
We're seeing a little bit of hope, right? We've seen 2 cuts now, and then the Americans did that kind of like that emergency rate cut. They did a 0.5 cut.
Yes, they did another one, and the Americans are forecasting another 0.5 point cut in the months to come as well for them, which will be good. Right. But with the Bank of Canada, which is interesting, is we've got 2 more meetings this year and quite a few meetings next year, of course. Right. But we've got one in October.
You've got a slide with that too, right? Yeah, you're going to put that slide up. There you go.
So just gives you a bit of an idea what's going to happen with Bank of Canada rate meetings over the next 12 months and a lot of the forecasts. So we've got another slide here showing a little bit what the big banks are talking about we're going to see, or they're expecting us to see with mortgage or Bank of Canada policy rates and things like that happening. We're currently sitting at 4.25%.
Right. Yep.
CIBC and National Bank are probably leading the highest expectation moving into the end of after these 2 meetings. They're expecting to see 0.75% drop. Forecast is 0.25 point in October and 0.5 point in December.
Right, and that gets us down to that 3.5 kind of thing, a 3.75 range, right?
Which is nice. That's when we're starting to make a difference in people's mortgage payments, right. Especially the folks with variable rate mortgages are starting to see those differences come along,
right? Yeah,
for sure. And then looking into Q4 of 2025, so the following year, we're seeing some of the rate cuts expected to be down as low as maybe 2.25% with the Bank of Canada rate, which is a 2% drop from where we are now. That's really going to make.
And they're saying that's kind of the target that they were kind of looking for in the U.S. too. I mean, that kind of leads policy, and the U.S. is saying their target rate is kind of around that 2% range, right?
Well, that's for their inflation rates, but their
No, I'm talking about their interest rates. They say they want to kind of keep in that target range as well as their inflation rate.
Yeah,
kind of
for sure. And that's the Canadian goal too, is to be down in that neck of the woods somewhere as well. Okay. Which, when you start to see those changes, it makes a big difference in what mortgages are happening and things like that. So, CIBC Benjamin Tall is expecting to see the real estate market start to recover quite well in 2025 and take off really strong in 2026 with these interest rates changing the way they are. So it'll be interesting to see. Benjamin Tall with CIBC has been one of the most accurate in their forecasting up until this point. So, and he's again one of the most aggressive with where he thinks the Bank of Canada rate's going to have to go. He's actually forecasting a 0.5 point drop in January as well. So, which will be a pretty significant change.
Right, especially, a 0.5 point will actually stoke some activity, I think.
Well, if we see that, that could be 1.25 points by the end of January. If we do the half, we do the 3/4 now and the half, then I think we'll start to swing into a bit more of an active spring market for sure if that happens.
And they made some mortgage rule changes too, right?
They have, which has been an interesting thing. This was just announced actually on the 16th of September, but they've increased the cap for insured mortgages from $1 million up to $1.5 million. So if you've got less than 20% down, you're not restricted to that $1 million mark. And the last time that was increased was quite a few years ago now. So it was about time that they move that up, especially with what home prices have done in the past few years. But one of the biggest things they've done is they've allowed a 30-year mortgage amortization. They've expanded it on the 16th as well. So this amortization of 30 years is available to all first-time home buyers now, but it's also available to all buyers of new builds these are both effective December 15th. So anybody buying a new townhouse, new condo, new home for new construction can qualify for a 30-year mortgage, which makes a bit of a difference. It helps reduce your monthly payment.
Helps with that payment. But
definitely.
Still in Canada, we don't have like long-term mortgages though, right? Where you still have to do like a 5-year renewable, right? Whereas in the U.S., you can get some longer terms, right?
Yeah, our mortgages are still basically 1, 2, 3, and 5-year mortgages. Yeah. There have been some 10-year mortgages out there, but in the U.S., they'll get a 25-year
so mortgage. They just basically lock that price in for 25 years, right? So they don't get as much fluctuation when even interest rates go around. A lot of people are just kind of like riding out the wave, right?
Well, and that's why the housing market in the U.S. is so tight right now. Anybody that has purchased in those low interest rates, they're not going to sell their house. Right? They're not giving up that low interest rate. They're not portable like ours are. Those mortgages go away and then they're under the new regime. So one of the other things that they talked about in the last budget that I read the other day on their mortgages is a lot of times, you're dealing when you're qualifying for a home, you're having to to do a stress test. So
Yep.
you've got to qualify for that mortgage. And one of the things, once you qualify, you've been locked into your bank because on your renewals, because you don't want to do that stress test again somewhere else if
Right, you may not
changed.
qualify.
Exactly. So what the government's done now is allow you to move your mortgage to another institution and not be required to be covered
really?
under that stress
There you go.
test. And their reasoning behind that is to hopefully allow more competitive mortgage
More rates,
market
yeah.
for anybody that's renewing. So I think that's another thing that a lot of buyers should be aware of, that just what their bank phones them up and says their rate, they might be able to shop around now at other institutions and find a better rate.
And the variable rate kind of tracks what's going on with the Bank of Canada and that, but the longer term rates kind of like that's the banks kind of like forecasting where they see rates going long term, right?
It is, and that's in my word. 5-year money, the lowest I was able to find today at one of the main banks, top 6 banks, was at 4.49%. And that was basically just doing some website searching from the internet. So you're probably going to be able to talk to your mortgage broker, maybe do a little bit better than that.
Yeah.
Some of the private guys are just lower than that.
Yeah.
So one of the things we did,
Be nice to see those numbers in the 3.5 on the 5 years and stuff like that, right?
it would be, you know what, as soon as we start getting under 4%, you know, you're definitely going to start to see people jumping back into the market. We're getting back down to historically low interest rates when you're at that level. I mean, we're not going to see, you know, 5-year money back under 2% like we did in that for that short time frame back in 2021. And so, yeah, it'll be interesting to see.
Do you think a lot more people will kind of switch to a fixed like 5-year term versus the variable? Because, you know, like some of them got stung a little bit, because there's a lot of Canadians that use the variable term, right?
Variable was very popular, especially when rates were on their way down, and that's what I would be doing now. I believe is be looking at either a really short-term mortgage right now if you're buying, knowing that the rates are going to come down over the next year, things like that, or variable. But when you get down to those historically low rates, when you were seeing 5-year money delivered at under 2%, I really couldn't understand why people were staying variable. Because how much cheaper was it going to get, right? And where you
next to free.
Yeah, exactly. So, but to be able to lock in for, you know, 5 or 10 years.
I'm one of those guys that got trapped in there. So
in the variable rate mortgage, and I wrote, you know what?
My banker said, "Hey, don't worry about it, Jim. They're never going to raise it that high. Just stay."
Well, after being in this business for a little over 33 years, and it's always that, the market's never going to go down. The market's never going to do this again. It's just give it some time. It'll change.
And by the time I phoned them several times, it's already. He said, well, it's not going to go up anymore.
You've already seen the increase, Jim. You might as well ride it out. But now at least you're starting to see the benefit as those rates come down. And
I mean, over time, it's been worked out pretty good. But like, so you just got to kind of ride the wave. But I know a lot of people, especially if they're coming renewals, and like from when rates were 0.25 and 5, and a $1 million mortgage, that's like an extra almost $3,000 a month. Right?
It's staggering for a lot of people. I mean, and that's the issue. And that's one of the concerns that Benjamin Tall talked about in one of his latest updates is the amount of mortgages coming to renewal in the next 1 to 2 years.
It could break a lot of Canadians.
It will, and that's why these interest rates need to come down and get it to where it becomes back to, seeing increases and crippling like it was before. Yeah, and then one of the things that'll cause us to do is it'll take away some of the motivation for the sellers that are going, geez, I can't afford my home anymore. As rates continue to come down and their variable rates start to lower, their motivation to sell will probably change a little bit as well.
Because we need to see some building activity too, right? We need to see some supply come on too, because it's that even in Kelowna, like the amount of condos that were going up for a while has slowed right down. I mean, there's a lot of rental properties going up now, but not a lot of development.
No, and that's one of the other things that the forecast has been talking about is we're probably going to see condos come down a little bit more in the short term, but as that lack of building and lack of new starts to catch up to the market, we will start to see the inventory tighten up there and prices start to increase back in the condo market. One of our markets in Kelowna that's actually gone up a little bit is townhome sales, the average median house price on a townhome, because people are finding that to be the right mix between a condo and a house and getting a little bit more space.
They get a little more value there, and then less heating costs, I guess, because you're sharing a wall. And
everything. Less taxes, cheaper price point to get in a single-family home. But
less yard to deal with.
Exactly. Lots of different reasons behind it. So one of the things that I did do, Jim, is I've got a slide on cost of borrowing some money and with the 30-year amortization versus a 25-year amortization. we just picked a $100,000 mortgage amount, and this is quite easy that you can just, if you got a $300,000 mortgage, just take everything and times it by 3. But your payment on a 30-year amortization is actually about $48 less per $100,000. So if you start talking that $1 million home, you're $500 a month less. But what starts to happen is your payments, you're going to, over the term of 5 years, you'd pay about $3,000 less in total payments. But what you'd be doing is you'd be paying about $349 more in interest. Right. So at the end of it, your principal, you're paying less principal off on your mortgage, and your balance at the end of the term is more money than you have when on a 25-year amortization. Plus it's 5 years longer. So all of that sort of stuff starts to add up. And what I always say to people with going with a longer term, and we used to have this conversation a lot between 20 and 25 year. Yeah. If you've got to go to a 25 year, try to make the odd payment double up and try to get it down to where you do it.
It makes a big difference.
It makes a big difference. Yeah. One of the things I used to always talk with the first time home buyers, if you're comfortable making that payment this year and you got a 5-year mortgage at $500 a month, go in next year and raise your payment $25. Yeah. In the next year, $25. You won't even notice that $25, but all of a sudden you'll cut a lot of amortization out of your mortgage, especially in the beginning of your mortgage when it's a long mortgage. So
for everybody out there, if you take that $100,000, say if you do $1 million mortgage, just times all those numbers by 10.
Exactly. Yeah.
Or if you have 500,000, and times it by 5.
Exactly.
Right? And then you'll easily get the numbers to work. This is a great way to do it.
Yeah, and it's one of the ways that just makes it easier because if you tell someone $1 million mortgage and someone says, "Well, I'm only doing 500 or 600,000,"
right?
This way's a nice way to multiply it and see what you're doing. Sure. But the 30-year amortization is definitely going to help some people, make it a little bit more affordable.
Maybe especially early on in their careers and stuff when money's tighter, and as they get more money, then they can kind of change it and change they can change their amortization schedule in their next renewal.
Next renewal for sure,
or they usually have those prepayments and all kinds of things. They increase payments on an annual basis too. You can kind of do those things.
Yeah, and if you get a windfall, you usually can pay up a certain percentage of your mortgage off every year as well. So there's lots of ways to take advantage of it. But the best thing you want to do is, like I said, is getting into the market is number one, right? And then figuring out how to take advantage of those things as you move through your mortgage term and paying off your home.
Yeah. So again, be prepared, right, as those rates come down, and know what you're going to buy when the opportunity presents itself.
Well, I think one of the things we talk about just about every time is getting in and sitting down with a professional, and not just a real estate agent to help you buy your property, but a good mortgage broker that's going to be able to help explain it, because you're going to see interest rates out there, 5-year money, that's a lot cheaper than what the big 6 banks will, but there's lots of details you need to know about those mortgages. What's your prepayment penalty like? Do you have the flexibility to pay a little extra off every month? So there's a lot to know about your mortgage other than just the interest rate. And you want to make sure you're getting good advice on your mortgage front for sure.
And just like on the realtor, just make sure even the areas that you buy in, that maybe some areas might be better for your situation versus other situations, right? Like family or not family, right? Some areas in Kelowna and different things, right?
For sure. Sitting down and getting somebody, a professional that totally understands your whole picture, they're going to be able to give you the guidance you need. And that's really what it comes down to, is making sure that you're making the right steps as you enter into the real estate market.
Well, the good news for Canadians, though, is that interest rates have turned down. We've seen 2 cuts in a row. The Americans have made that big 50.5 cut, and we may get one of those, according to CIBC anyway. We'll get a 0.25 and probably a 0.5, and that'll make for a Christmas rush. Maybe you can buy that house at Christmas or something.
Exactly. I think that if we start to see the rates that are forecasted to drop over in the next few months, I think that next spring the real estate market is not going to be as slow as it is right now.
I think the best thing we'd say, the sun's starting to come up, right?
Yes. You know what? I think so. It's a brighter day out there for sure.
The sun's starting to come up for
sure. Definitely. But I think that's really about it on the market and the rates right now, Jim. And I think that everyone needs to know.
Well, that was great. That was awesome. And excellent. I think that's good information for people looking to buy a home or even sell their home, because now they can think, because a lot of stuff's been sitting, right? So
definitely the market is slower. I mean, days on market are up. The amount of listings expiring is up. So price is still key to getting your home sold. It's interesting. You'll see a house on the market and a neighbors will list, and they might only be $25,000 less, but it sells in multiple offers. And it's just really price sensitive, where before $25,000, $50,000 price adjustment, the market was catching up to that.
Right.
Well, the buyers are way more astute on what they're willing to spend, and their things are set way more in stone right now for the buyers. So the sellers need to be making sure they're hitting the price point properly on their house.
With that said, we thank Jerry and Remax Kelowna, and that's the Remax report here. And we thank you for watching Kelowna Now.
Excellent. Have a good day, everyone.